So one of my YouTube subscribers recently was reading Mark Minervini's book, Trade Like a Stock Market Wizard. That's his first book. In that book, Mark Minervini is doing some discussion on the fundamentals of the company. In that discussion, there is something called as Code 33 situation. So my YouTube subscriber was asking, how do we look for stocks that meet that Code 33 criteria on MarketSmith India website? So we will discuss that today. Second question he asked was, how do you know whether a particular company is improving its market share within its own industry group? So we will look at that question as well. So first, let's try to understand what is a Code 33 situation. It's very simple. Code 33 situation means a company which is currently experiencing at least 3 quarters of acceleration in its EPS growth, at least 3 quarters of acceleration in its sales growth, and margin improvement in the latest 3 quarters. Now, regarding margins, I would like to say that if you read William O'Neill's and Mark Minervini's books, basically they are looking at four things when it comes to fundamentals: EPS, sales, return on equity, and margins. Now, if the return on equity is less than 17%, then we look at margins. But if the return on equity is more than or equal to 17%, margins are not that important. This is consistent with William O'Neill's book. Another thing about margins is that in MarketSmith India website, I think they don't give quarterly net margin ratio, they only give annual. And I personally only broadly look for improvement in margin in the last 3 years, 5 years, and 10 years. So I would look at annual margin improvement. EPS growth and sales growth, I would look at quarterly. Now, how do we find stocks that meet this criteria? Well, if we start from the beginning, remember I have a specific evergreen filter that I had discussed with you, and I only limit my research to those stocks. So, for example, if I go to breakouts, I have a bookmark here. Okay. If I go to breakouts, see, this is my filter. Okay. This will never change. The three MarketSmith ratings, then technical filters, and fundamental filters. So I am not using any specific uh, filter to figure out what are the Code 33 stocks. When I apply this filter, I am getting currently, say, 31 stocks. Now, within this 31, if I find a stock that meets the Code 33 criteria, that's great. If I don't find a stock that meets the Code 33 criteria, then probably we don't have any stock in the stock market which meets the Code 33 criteria, or even if it is there, it probably has poor comparative strength. Maybe it has got poor relative strength. Maybe it has got poor industry rank. Maybe it doesn't have enough liquidity, right? Maybe technical strength is poor for the stock. Maybe it's trading below the 50-day simple moving average. So just because a stock is showing Code 33 situation does not mean that you buy the stock. Okay. In the same book, Mark Minervini also says that no matter how great the fundamentals of the company, if it is not showing technical strength, he will not buy. Okay. So let's look at an example. Now, just because a stock comes in that filter does not mean that you buy those stocks. You have to do more analysis as per our orange trading system framework. So accelerating EPS growth for the latest 3 quarters, accelerating sales growth for the latest 3 quarters, and margin improvement for the past 3 to 5 years, maybe 10 years. Okay. Let's look at an example. See, I have taken a screenshot here for you. I cannot disclose the name of the stock. I am not allowed to discuss individual stocks as per the regulations in India, I cannot show you chart with latest 3 months data. So you know what I did is I took the screenshot from Market Smith where they show consolidated quarterly earnings. So cannot disclose the name of the company. But have a look at this. This is EPS growth. See, from March 2024 to June 2024, there is acceleration in EPS growth. From minus 30, it goes to 7. From 7, it goes to 17. From 17, it goes to 23. So these are EPS growth numbers. These are annual EPS growth numbers. Although it says quarterly here, these are annual EPS growth numbers. So basically, December is quarter number is compared with previous December quarter number. That's the percentage it represents. So it is annual. Okay. So latest 3 quarters of acceleration in EPS growth. Now, does this meet our criteria? No, because we need minimum 40% growth in EPS to be confident in taking the position. But 3 quarters of acceleration is also fine. If that number would have been higher, our risk in the position would have been lower. Just because it is less than 40% doesn't mean we don't take the trade, right? So it at least is showing us three let 3 quarters of accelerated EPS growth. Okay, that's what you see here. What about sales? See, it from 10 it goes to 14, from 14 it goes to 19, from 19 it goes to 27. That is 3 quarters of accelerated sales growth, right? So the growth rate is accelerating consecutively for the past 3 quarters for sales and EPS. Okay, that's partly code 33 situation. And what about margin? The same company, I look at the after tax margin. Look at this from 2020, it was 10, 15, 20. So this is improving from 2020. This is improving. Then it begins to drop from 20, it goes 16, 16, it goes 13. So this is not expanding margin. This is shrinking margin for the last 3 years. For the last 3 years, if the margin is shrinking, do you think last 3 quarters the margin is going to be expanding? No, right? So I broadly look at past 3 to 5 years, maybe 10 years of margin improvement. Okay. So this gives us an idea of whether a stock is in a code 33 situation or at least closer to a code 33 situation. The closer a stock is to the code 33 situation, the lesser is our risk because it was found by people like Mark Minervini that stocks that showed a code 33 situation in the past were the ones that tended to perform well in the future after these numbers were already on the table. Regarding market share, how to determine whether a company is improving its market share in its own industry group. Now, I don't do it. I don't look at market share. I'm not interested in looking at market share because the studies conducted by William O'Neill found that the four most important factors in determining the fundamental strength of the company, which propels a stock further, is EPS growth, sales growth, ROE, and margin. Within the four, the top three are very important: EPS growth, sales growth, and ROE. If the ROE is more than or equal to 17%, we don't even look at the margin improvement. If the ROE is less than 17%, we might look at margin improvement. This is consistent with what you will read in William O'Neill's book. Now, the question is when we say market share, we are trying to add another variable to the equation. Now, I don't think market share data is something that I will get on MarketSmith. Okay. So if I have to look for market share improvement, I will have to go to some other website, which means I'm adding another layer of work in my daily scanning process, which means for every stock I have to do that. Well, that's additional layer of work. I don't want to complicate my system. I want to keep my system simple. So if you look at this orange trading system, once the stocks are filtered, okay, I do 5 kinds of analysis on the stocks that are shortlisted, which are currently forming a base which has minimum 10 candles and 4 points. Okay. Now I want to do all of this in less than a few seconds for a particular stock, maybe a minute or so. I don't want to spend more than 1 or 2 minutes on a particular stock. So when I say that, what I'm trying to say is that you can only spend 1 or 2 minutes on a stock when the criteria that you're looking for is fixed. If you keep changing the criteria, or if you keep adding more variables, your system becomes more and more complex. So I am not saying don't check market share. I am not saying I can't check market share. I can just Google around and check what's the market share improvement in the company, and I will find that information. But I am saying that I don't want to look for that information because I don't want to complicate my system. I want to limit the number of variables I track, and I want to keep that process consistent across stocks irrespective of the industry group. Because the factors that I'm looking for are the vital ones. The market share is not an important factor as per William O'Neill's studies being conducted. So, what I have done in the orange trading system is that I have already defined what I will look for in a stock, and market share does not come in that definition. Okay. So, even if the market share is declining, but all of these factors are in my favor, I would not hesitate taking the trade. See, there could be n number of variables when it comes to fundamentals, which may not be in my favor, but I am looking for the most important ones, the most important factors that have a huge impact on the stock, or which have had huge impact on stocks in the past. So just for the sake of simplicity, I don't do it. Okay, it's very simple. And I don't think in MarketSmith they have a place where you can check the market share improvement. What you could do is, after you have done all of this analysis, let's say you get 31 stocks here. Out of 31, you shortlist 5 stocks which are forming a base. And the 5 stocks you run through this, out of 5, you get 2 to buy for the next day. For those 2 stocks, what you could do is you could use something like artificial intelligence, maybe Chat GPT, prepare a set of 10 questions, which will be standard questions that you will be asking about any company that comes in this. The standard questions could be like, what's the business of this company? Number one. Number two, uh, what what is the product, or what is the business model of the company, or what service do they offer? What is their competitive positioning in the industry? Is the market share improving? Who owns the stock? What is the caliber of the management of the stock? The whole set of checklist that fundamental analysts use. You can take the top 10 questions, or maybe top 20 questions, and store it in some note application in your mobile phone, and just copy paste those 20 questions on Chat GPT, give the name of the company, and it will give you a whole host of information. I think that would be a very simple way to quickly determine the situation that you are getting into. You would also want to know whether the company has applied for a new patent, or whether they have won a new order, or they have created some new product, innovated or something. Now, you don't have time to check all of that by going through different websites. So why not create a checklist of questions, which I don't do, by the way. Don't ask me to create that checklist. I'm not going to do it. You do, you want to do, you do it. I am not going to do it because I have already defined my boundaries. I only look at these factors which are important for me. Okay. Rest of the things, if something comes up in the newspaper, and if I own a stock and something about the stock comes in the newspaper, that might influence my decision making. But I don't want to stray too far away from this system. Okay. So that would be a great idea, because Chat GPT is like your agent which will go out in the web and cull out the information that you need. And when you get that information on Chat GPT, look for what you're looking for. And that's just a supportive, like a confirmatory uh, piece of data that you are getting. The main piece is here. The main analysis happens here. As long as you do this thing right, then everything else is secondary, second priority. This is first priority. Okay. Thank you so much.